Hey guys, this is Dom Rinaldi. Thank you for watching Dominating Your Investments. Today we're going to have a short video on Tesla. I'm learning more and more about the stock as I've moved it up to my top 10 holdings, and I'm really excited to learn more about what they're looking to do in the future with AI and their vertical integration with their AI chips. But today we're just going to talk about the recall that happened, which could really provide an opportunity for getting shares at a lower price. This isn't buying or selling recommendations, but if you're a long-term holder, you would want to be interested to know about what this recall means. And so this is just my opinion, and I'm continuing trying to build my position in Tesla. And then we're going to just look at the valuation and where I think some fundamental evaluations on finances with Tesla can really make it look like it's overvalued when really I think it's undervalued. So let's take a look. So we'll start with the negative news that we heard this morning. The 575,000 cars in the US that have been recalled. So they said it's nearly the equivalent to its global deliveries last year because of technical defects that may increase the risk of accidents. The company plans to recall all Model 3 vehicles made between 2017 and 2020. That's as many as 356,309 cars. The cable harness for the rear view camera may be damaged by opening and closing the trunk and preventing the image from displaying, it told the National Highway Traffic Safety Administration. Tesla is also recalling as many as 119,009 Model S cars assembled from 2014 because of a faulty front trunk latch that could cause the hood to open unexpectedly, according to a separate NHTSA statement. The company said it will fix both issues free of charge. Tesla's shares declined 1.5% in pre-market trading, and the stock has gained about 54% this year. The electric car maker has had a few run-ins with regulators. The NHTSA said earlier this month it's reviewing a recent software update by Tesla that allows drivers to play video games on a dashboard screen while the vehicle is moving. NHTSA is also in the midst of an investigation into Tesla's autopilot system. The probe was launched by U.S. regulators after a dozen collisions at crash scenes involving first responder vehicles. Tesla earlier this year had to make a software fix for more than 285,000 cars in China, most of the vehicles it delivered there in recent years, to address a safety issue identified by the country's regulator. Okay, so this doesn't look good. We probably will see some selling off, I would assume, today in the market. But Tesla's looking to address this fix as fast as possible. And you can see on their website here to learn about their recall information. And it's never good to have a car be recalled, obviously. But you can see here your Tesla vehicle is protected by a 4-year warranty. If your Tesla is included in a recall service to address the issue, will be provided for free regardless of age or mileage. And check if your car is affected by any of these recalls here. So that's all the recalls they've had in their history, I believe. Not 100% certain, but I couldn't find any others from their website. But when you look at Dodge, Ford, GM, all these other large manufacturers, they have so many different recalls and so many different models that they have to have their VIN number plugged in just to see which recall you're looking to address. So yes, this is not the best news, but I think that they will continue to work through these issues as they have in the past with software updates. And we know based on the interviews we've seen with Elon that safety is definitely a concern that they focus on. They have more regulations than even what the government has on when they produce a car, and more safety checks. So I think that this will be a top priority. We all know that Elon works crazy hours and 7 days a week between SpaceX and Tesla. So this will be definitely all over the media today. But in the long run, I don't think this impacts the stock at all. When we look at also all the selling of the shares, let's just look at what happened just recently, I think 2 days ago. When we look at on Tuesday, there we go. On Tuesday, that Elon bought another 1.6 million shares of Tesla stock at a very low price, which he never took a salary for his whole time as Tesla CEO. So good for him for betting on himself. Very similar to Alex Karp with Palantir. Tom Nash did a fabulous video about this topic. So go watch his channel if you want to learn more about this. But you've never seen any other company out there sell as many shares as they have. Now, granted, it was for the tax purposes and why Elon had to do this. But to do this and not see the stock crash or influx very much and be able to bounce back so quickly, that shows you the conviction of what Tesla shareholders have. So now moving on to just the valuation, right? So Citigroup, I think they just upped their share price this morning to $265. Well, the stock's actually at over $1,000 per share. And so we can see that they're not a believer in Tesla. But when we look at the valuation, we'll go through what a DCF here from on Simply Wall Street shows, but how a DCF really doesn't take into account all the optionality of a company and future revenue streams from other places. You really have to factor that in yourself. And so when we look at the company, you can see on their Snowflake health check here that they have great health on the balance sheet, past appreciation. As we all know, it's kind of the stock that a lot of people say, like myself, I wish I would have gotten Tesla at an earlier point. And then, of course, a large future growth. So earnings are forecast to grow 35.65% per year. And earnings grew just last year 560%. So you can see either a real steep decline or they can't really figure out what the projections are to be of the growth, right? I think 35% is very conservative. So we can see as of yesterday, it was at $1,086 per share. It's obviously appreciated very fast, but emerging technologies and innovative technologies like Tesla that are striving to change an entire industry are going to be very volatile. So you have to be looking at the bigger picture and be ready to ride that roller coaster, right? So when we look down here, you can see the U.S. auto manufacturer shareholder returns was 44% basically last year. Tesla was at 56, so just a little bit better. You can see here that Tesla is now profitable. They have a gross margin of 23% and their net profit margin is 7%. And let's see if that's actually projected to increase here over the time. Now, the valuation is based off of a very conservative DCF, and they're saying, well, it's really only worth $361 current fair price based on future cash flows. But this doesn't take into consideration Tesla having new models of cars. This doesn't take into consideration the renewable energy part of their business and their solar roofs. I think we will see new products that change other parts of humanity, whether it's more things around energy or even Tesla AI robots or software. Now that's speculation because we haven't seen all of that yet, but I really wouldn't bet against Elon Musk. And you can see he's still buying shares, as we talked about earlier, of his company because he's betting on himself and what they're able to achieve. So they just became profitable. So all of this is going to look in red that, hey, they're not as profitable as many other car companies. But you got to take into consideration how fast they've done this to really revolutionize the industry. Now, if we look at the future growth, that's what you're investing in a stock. You're not investing in the past. You're investing in what they will become. So if we look here, based off of, I think, the last quarter here, September 29th, they did $46 billion in revenue per year and then the 3.5 in earnings. But if we look back or look forward, we'll even go to 2023, we're looking at doubling that in basically about 2 years. And then we have tripling the revenue or earnings almost. So overall, huge growth, right? So that looks very promising. We look over here, they're outgrowing their industry. They're outgrowing the market. They're outgrowing, well, actually take it back. They're not outgrowing the industry yet, but they are outgrowing on earnings. So they do have some work to do from a revenue perspective there. But once again, not thinking about all the different models of cars and other parts of their business. I just think there's so much that Elon has in his head that he wants to do with Tesla. So if we scroll down a little further here, the future return on equity is higher than the industry. It's at 28% projected for the next 3 years. So that's very encouraging as well, making good use of shareholder investments. And then the historical earnings, as we talked about earlier, very, very good over the past couple of years. And you see the acceleration, right? So from last year to this year, 1.9% to 7.4. That's almost a 3.5x acceleration. So you know, if that continues, we're going to see these really accelerate over time. And currently, once again, in the present, return on equity is not as good as the industry. But this is a company that just became profitable. Same thing goes for return on assets and return on capital employed. They actually did very well at 11.5%. Now on to the financial position of the company. So they have $25 billion in assets, over $18 billion in liabilities, and $32 billion, almost $33 in long-term assets, over $11 billion in liabilities. So they have more assets than liabilities, both short and long-term. Then we look here, Tesla has more cash than its total debt, and their debt to equity ratio reduced from 101% to 23.4%. That's a huge reduction. Their operating free cash flow or operating cash flow their debt is well covered by that. And their interest payments on their debt is also well covered by 9x. So they have plenty of cash now, no worry to be concerned about are they going to go bankrupt or anything like that. They've passed those hurdles. They're now onto the scale phase for their business. And then really what I like to look at here is the ownership, right? Still 17% ownership within the company. So he's impacted as that share price goes. And you heard him on a recent interview. He said, I believe the CEO, if a company goes down, then the CEO should go down with the ship financially. And I definitely wouldn't bet against Elon. So you saw all the shares that he had to sell off for the tax purposes. And then you look here, 45% almost of institutional ownership, 20%, obviously that's mostly Elon there for inside ownership. And then, of course, the general public. But still half of institutional money haven't made up their mind on Tesla. They maybe are thinking about Rivian or Lucid or other companies. My thing here is I believe they're still viewing this as just a car company. And it's so much more than that. And you have to think really outside the box of what this company could achieve with all the data and AI they have. Another thing that I really like to see is I pay attention to the top shareholders that look into a company. So BlackRock is an exceptional technology investment firm. I always like to see them. That's the number one firm I look at. Vanguard's another great one. If we scroll down here, we can see some more insider ownership, and Bailey Gifford's another one that I look at. So overall, great firms are invested in, looking at the company from the right perspective. And then the catalysts, we have the other factories that are going to be opening up worldwide. So we're going to see more distribution of cars. And once again, Elon is playing chess, 4D chess, and everyone else is playing checkers. So I think there's a lot more to come that we just haven't seen from the company yet. So I'm investing in the future and what could be. Obviously, diversification is critical when you invest for the long term. You don't want to put all your eggs in one basket because that's really just gambling at that point. But I definitely want this to be continue to be a top 10 position of mine that I build on. And hopefully this helped you kind of see my perspective on the company just quickly on the valuation and everything with Tesla and where they are here on the health check of the business. And I believe that they'll overcome this recall and it may provide a buying opportunity. Who knows? We'll see. Thank you for watching Dominating Your Investments. I know this episode, once again, wasn't as short as I was hoping it would be, just because when I find stocks and companies that I'm really passionate about, I want to dive in deeper. I want to share my perspective and what I'm learning about these companies. And hopefully it helps you make your own decision as you do your research, as you do your own conviction, and really learn about the companies that you want to invest in long term, because you can only earn the right for that conviction if you do the homework and feel the conviction, so that when it does drop 50%, you know it's okay. If your thesis is intact, the company is moving forward, they're executing. The stock market doesn't just go straight up. It's more like a roller coaster when it goes up, but when it goes up, it's always up and to the right over a long period of time. So if you like this video and want to see more videos on Tesla and other companies, please make sure to hit the subscribe button and help me get to over 1,000 subscribers so we can really start pushing out more content to you guys and move forward.